Today I had traded Nasdaq in my ass crack, aka pause. Um, a little trade recap that I had on Nasdaq today, a Tuesday, a no news Tuesday. Actually, a lot of volume in the market today. Surprisingly, I wasn't expecting it, but that's why you stay ready, so you don't gotta get ready. You know what I'm saying? And that's exactly what happened today. And as you can see right here, we actually are trading at we've been trading at all-time highs on Nasdaq and on S&P as well. But yeah, we actually took two trades today on Nasdaq, and they were both some bangers. So let me go ahead and I guess break down on how it is that I trade and why it is that I take my trades. So basically, I trade reversal, confirmation, continuation. Reversal, confirmation, continuation. Yeah. Okay. So basically, what I do is my first step in my trading plan is waiting for a liquidity sweep. My pre-market analysis, basically, I'm looking to mark up any high time frame liquidity that is there in pre-market. That way, when the market opens, it'll come up, sweep that high time frame liquidity, and go into the other direction. Now, you're probably like, why do I have so many high time frame liquidities right here marked on my chart? That's because I don't know where it's going to end at. I don't know if it's going to come down here and then go up. I don't know if it's going to come all the way down here and then go up. I don't know if it's going to come down here and fill this 4-hour imbalance and go all the way up. I don't know. So it's safe to say that I have everything marked up just in case. But today, my bias overall, with us being at all-time highs, was I was looking for shorts. Along with crypto, was very bearish today as well, which gave me even more of a bias to go down in the shorts. But we had to wait and see what market was going to give us. So after you see I have all these high time frame liquidities marked up here, coming into the market, I believe we had a pre-market sweep. No, we didn't. We had a sweep of high time frame liquidity right there at 9:40, 10 minutes in within the market opening. From there on out, now I'm looking for any confirmation that we are going to go down for ourselves. Now that we had sweep some high time frame buy side liquidity up here. Another thing too is I like to trade within macro times. Macro times is going to be anywhere from like a 9:50 to a 10:10, 20-minute grace periods. A 9:50 to a 10:10 or like a 10:50 to 11:10. I back tested it a lot. It actually goes along with me believing that the market is an algorithm. You can see and back test it for yourself if you don't believe me. But from what I back tested, I can see that a lot of orders are taking place, a lot of moves are taking place as soon as these macros hit. And I don't think it's a coincidence. It's literally one of my trading rules, within my trading rules, that I need to trade within a macro. And you guys need to do some back testing because that shit is real. A lot to do with everything. So right here, 5-minute break of structure. I believe I'm already in this trade at this time. Yeah. This is where I had entered the trade. I was already seeing that I believe it was on that candle before. You could see that it closes right before the break of structure on the 5-minute, and I could just already tell with how close it was. The next one was just gonna like flood the face, which is exactly what it did. But in the midst of doing that as well, I had a 1-minute fair value gap marked up right before that 5-minute break of structure. You can see it's tapped into right here, along with equilibrium being set, floods the face. I feel like liquidity grabs is probably got to be the best thing I've ever found. Before I used to be like a scalper. I used to take long grace period trades. Shout out FX Alex G. I purchased his course. I feel like what he does is a very good strategy as well. But me personally, I like to be in and out the trades within the same day, possibly even the same hour. That's just me. I don't really like being in trades for too long like that. So my confluences here on this trade was 1-minute fair value gap, 5-minute break of structure. I had equilibrium right here. And another thing too is I haven't even mentioned this whole time is I'm looking at SPX. I'm looking at S&P 500 as well, because this can be used as divergence, SMT, meaning if one of the indices is making a big play and the other one hasn't made it yet, hey, 8 times out of 10, that one's just lagging behind, and it's kind of like telling the future, So I see at the same time, ES was making the plays to the downside as well. And after all the confluences I had with Nasdaq, right over here, you can see, I told you, macro starts at 1050. What the fuck is this? What the fuck is this? Look at this candle right here. Is this the candle that broke 5-minute break of structure? Is this the candle that broke 5-minute break? The fuck is the candle that broke 5-minute break of structure. All right, take profits. Where are my take profits? Look, another thing too, and I cannot stress this enough. I cannot stress this enough, because I used to have this problem. I still have this problem sometimes. Not really, but if all my confluences are there and everything lines up, press the fucking button, bro. You know what I'm saying? I feel like, in spite of FOMO and not wanting to miss out and everything like that, if my setup is there, I'm taking it. I'm not going to hesitate on it. I'm not going to sit here and think about it. If my setup is there, I'm taking it. Now, it's a problem if you're taking trades just to take trades. It's a problem if you're taking trades, 10 minutes before the market closes, which actually is fucking kind of what I did today. Not going to lie, but we have reason for that, and I'm going to bring that up. But take your trades, you know what I'm saying? And one of the biggest things I feel like learning within trading is knowing how to take a loss, and taking a loss on your chin, and not just, blaming the market. Because instantly you're just going to blame the market. And blaming the market is the last thing that you want to do, because now you take no accountability. And now once you take no accountability, you can see no improvement. You know what I'm saying? You have to take accountability for the things that you do in order to improve into this market. Because the market, if I were to put $1 million into a trade right now, or like 100K, I'm not even gonna say a mil, 100K into a trade, it's not gonna make no difference in price action, because the market has to go somewhere regardless. It's not like as if I used to think this to myself, like, oh, this market hates me, or this market knows I'm in this trade and they're not trying to let me win. What was that? That was me taking zero accountability, because I instantly went to blaming the market for what was happening to me. But in all reality, I'm the one pressing the button. I'm the one analyzing the chart. I'm the one that knew that my trading setup, my A+ trading setup was not there, and still hopped in the trade. Why? Because I wanted to be involved. Why do I want to be involved? Because I'm thinking about money. If I wasn't thinking about money, I wouldn't have forced myself into get to a trade. You know what I'm saying? That's like the main thing that I feel like is very important when it comes to learning about trading, is learning how to trade, not learning how to make money. Learning the skill set in which predicting price action and knowing where the market wants to go. And I feel like one of the greatest things that I have heard and learned is that the market money is just a side benefit. Like, it just comes with it. Just think of it that way. That money just comes with it. In all reality, the goal here is that you want to be able to predict the market, and kind of want to be, you don't want to lose, or what's the word? Is the word narcissist? Or like where you always want to be right type of thing, and then when you're not, I don't know, but you guys get my point there. Stop thinking about the money. I feel like going into this trading journey, that's one thing that I've just recently and have been grasping over, is to stop thinking about the money. And shit, it actually it starts working then, because I'm not looking at numbers, and learning how to take a loss, because learning how to take a loss is very important, because revenge trading is real. But that all comes into play when you're not taking accountability and everything like that. But like I said, right here, we had that 5-minute break of structure along with that macro. Boom. We have that 1 minute fair value gap gets tapped into, all while coming into this equilibrium right over here. And equilibrium is just basically when you're buying at a discounted price rather than a premium price. I feel like with the GAN box, it's just like, okay, once it gets into that discounted price, that's all I'm looking for. Boom. Okay, break out of it. Break a structure, 1 minute break a structure, 5 minute break a structure out of it. Boom, in the trade. All right. Take profits. Take profits are gonna be the same high time frame liquidity that I had marked up in my pre-market. Take profits. Why? Because price is seeking out liquidity. Why? What is liquidity? It's a large pool in which orders need to be filled. So take profits. These take profits are other people's stop losses. These take profits are retail trader stop losses. You know what I'm saying? And that's why I feel like liquidity has got to be one of the best things that I have found out about, because it gave me a whole new concept of trading. It taught me that trading is you're trading against banks. Banks don't lose. You know what I'm saying? Banks aren't in it to lose. You know, if you ever question yourself and what a liquidity grab is, say for example, a lot of people trade within like zones and supply and demand. I don't trade like that. But say right here, if this trade had went up, it breaks structure right here, people are gonna go in for buys because they're seeing this large movement up here. People are going in for buys. Where are they putting their stop loss? Say down here. Nah, that's way too far. Say anywhere down here, going in for the buys. Meanwhile, all these people that were in for shorts right here had got taken out, so they got their liquidity seeked. All right, now these people are in for buys. They set some stop loss down here. Boom, let's get them again. Take their shit out. You know what I'm saying? That's why it's so important, because this will be liquidity, and this could be a liquidity sweep. In this case, this is a liquidity sweep, but we're waiting for reversal confirmation. We're waiting for confirmation because it's not a liquidity sweep until we have confirmation. All right, it could just be liquidity getting seeked or liquidity getting grabbed, but it's not a liquidity sweep. I need a confirmation that that direction is done and we're going into the other direction, and I'm trying to ride the wave until we have to do it again. All right. Let's let this play out a little bit more. What are we on? We're on the 1 minute, right? Boom, boom, flood the face, boom. Okay. I believe this was my TP1. Obvious liquidity grab. Like, obviously, we're going to have a liquidity grab right here. I believe right here I had already taken partials, and I was break even at this point. That's another thing, too, I've been getting really better at, is trailing my stop losses and not leaving no money on the table. And it's been working out a lot better for me. Right here we continue. You can see right here we had formed another fair value gap. Honestly, if I didn't enter in the lot size and the contract size that I did, I probably would have I more than likely would have entered right here for another entry. But we had hopped on. We've been trading on Trade Locker recently, and I just enter on what I'm willing to risk for that day, and then just partial closes. So right over here, break even, took partials, fair value gap. This is what's gonna give me more confidence in whether or not to hold the trade if this gets respected, because I don't want this to get disrespected. You see, we had large movement coming out of it. See price ranging just a little bit. I think it comes up and taps it again. Yep. Boom. Right there. Big movement right there. Next TPs right here. Obvious liquidity. Like, easy. High time frame. High time frame, 1 hour, 4 hour is where I go to mark up my TPs. Right over here. Take profit. My final take profits here. Honestly, I wanted this down here. I believe this was a 4 hour imbalance down here, which is where price actually had went to. But you know, take what you can get. That's exactly what that went. And honestly, it was like a 1-to-4 risk to reward trade. So I'm more than happy with what I had did today. It was a great trade. So I didn't want to get too greedy, in which if it doesn't come down here and not get my original profits that I could have gotten. So, but it did. You can see getting out that fair value gap. Respects it completely. See that we're pushing down. I think right here we come really close to it and then go in the opposite direction for like a bit more, if I'm not mistaken. Yeah, like look. Yeah. And then I think we respect another fair value gap within here? I'm not too sure. Get prepared for shit like that on the 1 minute time frame. Definitely. I don't think it comes all the way up here again. I forgot. I think right here it floods it. Yeah, okay. TP hit. Oh yeah, I remember. I think so. What happens is it smacks this, and meanwhile, like I said, this is my final TP, and then it starts going up, and I'm like, at that point, I'm like, bro, like I'm thinking that it's just not coming back, but it comes back, but yeah, it had me for a minute. How can I speed this up? Dang, it was ranging for that long? I don't even remember it ranging that long. Wow, that's bad. My memory's bad. This happened today. That was crazy. Alright, boom. Final TP got hit right there. And of course, like I had said, as soon as final TP's little retracement floods the face. Boom. Like I had said at the beginning, I'm not interested in taking trades right an hour before market closes, but I couldn't really pass up on this one. I definitely went half on my position from the first one, but yeah, I couldn't really pass up on this one, so I did enter a trade an hour before Nasdaq and my ass crack closed. But it worked out in my favor. And just like what I did on the upside to the downside to catch sells is exactly what I did from the downside to the upside to catch buys. Boom. We have our high time frame liquidity. Our liquidity here is the 4-hour imbalance. All right? The imbalance gets filled. Okay? Imbalance gets filled. We come up. We break 5-minute break of structure here. We break 5-minute break of structure here. That's a 5-minute break of structure. What is a upside break of structure? A move up and then a move down. What is a downside break of structure? What is a high? A move up and a move down. That's a high. Okay. What's a move? What's a low? A move down and then a move up. This would be a low, right? So right here is our most recent high and then low. We break it. 5-minute break of structure there. What time is it? We're getting close to that macro time. All right. I'm interested. All right. Come right up in there. 1 minute fair value gap here. 5-minute break of structure here. I believe I also have some equilibrium in here as well. Yep. This was my equilibrium that I had set right here. High. Right here is a low to a high. Comes in to that equilibrium. Respects the fair value gap. I'm in it. I'm in that trade. Why would I not be in that trade? Where are my take profits? Obviously, some liquidity grabs. Liquidity grab. Now this was my final liquidity grab, which was really good because that's exactly where market had ended. I was wanting this one up here, but I seen at the time that it had got here, it was like 5 minutes left into the market being open. So best believe I just got out of that because I'm not gonna give my money back to the market. They've already taken enough of my money in the past. So right up here, trade. And a lot of times too, you're gonna see for anybody that trades futures or has been trading futures is right here. You see it finally gets hit. I had gotten out like right here though. I think it was like playing like right above it, and I was like, you know, fuck, I'm out. But after the original trades are like how today was my original trade. I wasn't even intending to take the buys that I had did, but it was too good to pass up on. Say for example, the initial move of the day in the session. Say if it sells, like you'll see that retracement to the buys to come back up and fill the imbalances that the market open had created. They come up quick. Like I've noticed that, and in previous trades, like this happened quick too, I guess you can say, obviously, because this is where most of the volume had came into play. But like these quick moves, these are banger trades too, and they happen pretty quick, you know, right before that market closes. I feel like that move, like I said, I believe algorithm, market's an algorithm, you know what I'm saying? Market is an algorithm, and shit like this proves my point. So you're telling me right before the market closes, we're just gonna have big moves like that to the upside, to fill the imbalances that we had going down, all while taking out people that were in shorts. They're trailing stop losses here. These are people's trailing stop losses. This is a trailing stop loss. This is a trailing stop loss. This is a trailing stop loss, especially for retail traders. You're telling me that we're just taking them out right before the market closes? Like, come on now. It's an algorithm. But that was my trade for the most part here today on Nasdaq. Tomorrow, I'm not sure if I'm gonna be trading tomorrow. Tomorrow's CPI day, yeah. So I'm not too sure if I'm wanting to trade CPI. Best believe I'll stay ready, so I don't gotta get ready. I'll be on the market, but I don't know if I'll trade it just yet. It depends if I see what I like, just like how I did today. But I was pretty nervous making this video, so if I look like I don't know what I'm doing, that's because I don't know what I'm doing. But I appreciate anybody that takes the time and listening to what I had to say. I look forward to making any other content here in the future. I look forward to becoming the trader that I aspire to be. Don't know if anyone was able to comprehend anything that I had said. Like I said, I'm nervous as shit. This is my first time ever really breaking down trades for people other than like my close friends and everything like that, or like my people that I trade with. But yeah, I definitely plan on improving on my trading here in these next 12 months, like big time. Like I just got, I don't know if you can see my trees in the back, but I just got like a whole office, whole room, you know what I'm saying, to where I can start making my content. So I feel like it's a next step, you know, for me to level up and everything like that, you know what I'm saying. But another thing too, I will say for anybody that is that trades or that had taken the time to watch my trading video today, journal your trades. It's very important to journal your trades, you know. That way you can go back and back test, because, you know, anything that you do, say for example, the trades that you take, if you had a winning trade, you need to journal on why you took that trade and why that trade had worked out. That way you can take trades later on and apply the same strategy that you had before. Vice versa. You take a losing trade, you journal a losing trade. All right? Now, I know what to avoid. I know what mistake not to make. You know? And backtesting is like number one. Backtesting is number one. I don't, if you're not journaling your trades and you're trading, just stop what the fuck you're doing. Honestly, just stop trading. Because why are you going to continue to trade and not want to improve on how you're trading? It's like if I go to a basketball court and pick up a basketball for 12 months straight, and I know I can't shoot, and I'm not trying to improve on my shooting, you know, but I'm trying to go D1, I'm trying to go NBA, and I'm sitting here going to the basketball court, picking up a basketball, my layup fire, My hook, fire, but I can't shoot for shit, and here I am still doing hooks. I need to get to the motherfucking 3-point line and shoot some fucking shots, bro. You know? That's what I need to do. So if you don't know why it is that you're losing your trades, if you don't know why you're fucking winning your trades, you need to journal your fucking trades. It's simple as that. Journal your fucking trades. Okay? Because that is one thing that is going to lead to success in being a trader, is journaling your trades. Alright? I don't give a fuck if you win or lose. Journal your trade. You know? And that's something that I had to implement into my head big time. That I need to journal my trades. That I need to stick to rules, and I need to be disciplined. You know what I'm saying? Like big time. And if you're, there's like softwares you can use, like I believe TradeZilla is one for journaling. But if you're looking for a free one, use Notion. Notion's pretty fire. I have like this whole template like set up for Notion, and it's free. So if anyone's looking for how to journal their trades or what they could use to journal their trades, Notion's free, but TradeZilla and then I believe FX Recap, those ones cost money, but they're better. But yeah, that's gonna be the little video for today. I appreciate y'all for tuning in. Maybe we'll have a little recap for CPI, but shit, I don't know. I be trying to stay away from CPI, but yeah, appreciate y'all.